Gold hitting new record highs today. Investors concerned about geopolitical uncertainty. They also expect, or many of them expect, central banks to go on increasing the gold weighting in their reserves. We are joined by Uma Moriarity, Senior Investment Strategist at CenterSquare Investment Management. Uma, thanks for joining us.
Thanks for having me.
I think it's fair to say very few people saw this meteoric rise for gold over the past year.
Absolutely. I mean, you showed the chart earlier, right? It seems like it's been a parabolic move in gold, and there are a lot of different things that are driving this. You mentioned geopolitical uncertainties. I mean, gold has been used as an inflation hedge. There are some upside risks for inflation here as well. Especially, you mentioned a little bit, CoreWeave, the kind of capital being deployed across the AI and infrastructure build out here is massive. And so you're seeing some inflationary pressures from that end. And so gold is being used as a hedge against inflation. It's being used as a hedge against a lot of this potential uncertainty associated with AI. There is a lot of conversation around whether we're in some sort of a bubble. So inflation hedge, a hedge against AI. And as you mentioned, that there is a lot of buildup in gold across central banks as there's a little bit of a pullback in reserves of the US dollar, frankly.
Is that partly people are concerned about policy unpredictability in Washington? That's why some investors and central banks are lightening up on the greenback?
This has been happening for a while, right? This has been happening for several years as you've seen kind of the holdings of US Treasuries across these major central banks really pull down. And it's happening just as you are seeing a lot more transactions in commodities and other markets happening that are not denominated in the US dollar. And so you've seen this de-dollarization trend happening for several years now, and I think it's just continuing.
What strategy are you recommending to your clients when it comes to gold? Buy equities, buy bullion?
You know, here at CenterSquare, we're really focused in the real estate market, and that's another great hedge for inflation, right? So as we see a lot of these various different risks going on in the market, there are a lot of places within the real estate industry where we see a lot of safety for investors, especially if you think about the equity markets. We look at global REITs here, and compared to the broader equity market, trading at very discounted multiples that you've really only seen once or twice in the last 20, 30 years. And so presents a great valuation proposition for investors as they're looking to diversify their equity portfolios, real estate presenting a great opportunity. There are some really interesting plays here where we're seeing demographic tailwinds, for example, driving fundamentals for real estate in ways that we've never really seen before. For example, in the senior housing space, where you're seeing this aging demographic coming into this needs-based senior housing property type. And it's coupled with the same time as you're seeing very limited supply of this product. And so you're seeing really strong fundamentals on the ground. And a lot of the REITs that are focused in the senior housing space are also able to really deploy a competitive cost of capital to also accretively grow their portfolios. So you have this really compelling opportunity from both the internal and external growth perspectives for senior housing REITs here right now across the US as well as in Europe.
The broad market, what's your view? Is there still too much euphoria about tech stocks?
You know, we've seen this concentration within the marketplace really associated with AI, associated with tech. We are seeing a little bit more broadening across the marketplace. And I do think as we see this broadening occurring, we're going to see some of these areas in the market that have not really seen that same love as it relates to what's happening from the perspective of multiples really come into play. So I think the market is broadening here a little bit more, and you're going to see some other parts of the market start to participate a little bit more as we start to see this market breadth.
Leave us with a final thought. What are you looking to from the Fed? There's a general consensus that we aren't going to get any cuts for a while. You guys, I believe, think there won't be a cut till the summer anyway.
It's difficult to see a reason for the Fed to cut here. The data that we've been getting from the economic perspective seems to be kind of muddling along, right? As long as they're still focused on what's happening from the inflation perspective, what's happening in the labor market, those data points that they've been seeing seem fairly fine. So until there is something material that changes from the economic perspective, and the data doesn't really indicate that to be the case, it's difficult to see a reason why the Fed would really move interest rates today. We'll see what happens when we have a new Fed chair coming here at the beginning of the summer. But until then, it does seem like there is no data to indicate that the Fed would need to move policy rates.
Uma, thank you very much indeed. Uma
Thanks for
Moriarity,
having me.
Senior Investment Strategist at CenterSquare Investment